You're listening to Burn Rate and Bullshit,
The show where founders, suits, and corporate clowns all get called the fuck out.
where Josh Robinson and Mike Nathan, entrepreneurs turned VCs.
With zero filters, strong opinions, and a bullshit detector set to high.
Welcome to the only business podcast that actually tells it like it is.
I'm a desperate man. Send lawyers, guns, and money. This shit has hit the fan.
Everybody wants to be on the cap table. Nobody wants to do the work to actually earn real deal flow. If your entire pipeline is my buddy knows a guy and whatever shows up on a crowdfunding site, you're not investing, you're donating. Real deal flow is built, not handed out, and it's built by being useful, having a clear thesis, and saying no so often that founders still respect you anyway.
People act like writing a check makes them an investor. It doesn't. Building a network that consistently shows you real opportunities before they hit the group chat stage, that's what makes you an investor. In 2026, there's more noise than ever. Platforms, syndicates, fake family offices, and wannabe sharks. If you can't tell the difference between a real pipeline and a glorified email list, your IRR is going to be pure comedy.
Mike, you are probably one of the more active angel investors that I have in my personal network. Would you say that you're active? Would you describe yourself as an active angel?
I would describe myself as active, yes.
Yeah. Okay. So what does that look like for you?
Me and my wife, our family, we place probably anywhere to 10 to 15 investments a year. No, they're not all very, very big. Some of them are significantly small, but we do place a range of prices. So I am spending now, and I have been, for a while, a lot of my extra time, nights and weekends. And before that, lunches, dinners, happy hours, talking with founders looking for investment. So I am very active in angel investing. And then obviously our stuff with 156 and some of the other funds I'm involved with. So, yep. I stay active, and I'm probably in the top 1% of that. Not dollars, but just activity wise. Yeah. So I'm in it.
So what does good deal flow actually look for an individual investor? I think this episode is probably geared towards more individual investors, high net worth individuals, angel investors. This is not professional money that we're talking about. So what does good deal flow look like for an individual investor? And how is that different than just random shit that shows up in your inbox? Because I can't even go on LinkedIn anymore because it's just the random stuff we get.
Yeah. So when you say what makes good deal flow, I'll start with maybe a number. I'll use some math, and then I'll talk about quantity, then quality.
Yeah.
Quantity for me it's going to be completely dependent on what you plan on investing this year. And, in
terms of a total dollar
yeah,
amount. What's
what's your plan? I'm going to put it this way. You ought not to be making an investment if you haven't thought through your budget for investment.
100%.
Or, I know you're going to talk about this later, your thesis for investment.
Yep.
So if you haven't done that, pump the brakes, do that analysis first. How much am I going to spend? So good deal flow to me looks like, okay, I'll use the number $100,000 a year. I'm going to invest in startup projects or just investing in general, right? Am I going to put some in stocks? Am I going to put some in loans to stuff, a CD, and what's going to go to private placement, small startup? So let's say that number is 100,000. I probably don't want to spend all 100,000 on one investment.
Obviously.
I don't want to spend 5,000 on 20 of them because that's ridiculous. I would think between 15 to 25, at the most I would spend 15 on any given one. So I would be looking at how do I get to 4 good deals to sign up this year? Let's say that's number $25,000 average. I need to be making an investment, writing a check at least once a quarter. So I wouldn't wait till the end of the year to December to try to find 4 really good deals and invest it.
Yeah.
I would be looking through that. And so you tell me how deep you want me to go on this, but I would think good deal flow in terms of numbers. If I want to say yes once a quarter, I should be looking at a deal once a week, a new deal once a week. So that's going to be 12 to 13 deals to say to say yes to one of those.
Has that been your pattern that you'll look at 10 and say no to 9?
Ish. Yeah. I'm getting better at it, and I'm doing a better job of communicating what I like and don't like. So the deals that do come to me are frankly more tailor-made now. People in my network and others know how to pitch. Or I'm also very quick to say no. When I say looked at it, I probably took a meeting with the investor or with the founder or the CEO, somebody. As you know, our inbox is loaded with, hey, got a minute? I want to tell you about my project. Well, we'll get to that later. But so yeah, so
which is not a bad source. I think you just have to be very deliberate on how you manage that information. How do you turf it off to someone to help you look at it, or just know exactly what you're looking for and be able to glance at something for 30 seconds or less and know, okay, this fits with what I want to be looking at, or it doesn't.
Yeah.
And if it does fit with what you want to look at, then you can go deeper. But you got to be really good at that 30-second review.
I mean, even think about it in terms of reps too. If you're a newerish investor, angel investor, you came into some money or you've got that disposable income now to spend, you're going to want to see 10 deals before you make one. Not because there's something magical about 10. It's your experience. You're going to hear about 10 different valuations based on 10 different methodologies, 10 different personalities probably. And then you're finally going to figure out, ooh, that guy's super shady. I don't trust a thing they say. And that gal was super honest. And you just now have, I think, context, right? You can look back on those 10 people. So I still do that. I want to hear a 15, 20-minute pitch. I don't want to hear an hour-long pitch. I want to hear a 15, 20-minute long pitch on a lot of deals, just to stay sharp. What are people saying? What are valuations? What are they doing? Mm-hmm. So what does good deal flow look like? I think you need to be looking at 10, again, I'll say that the 10 to 12 to 13 deals a quarter to place one bet every single quarter.
Yeah.
And then you'll figure out because here's PSA, advisory note for all those out there. If you're like me, you're going to fall in love with all of them or a lot of them. You're going to fall in love with the founders. You're going to love, they're probably somebody pretty amiable, pretty charismatic. Mm-hmm. They're going to seem amazing. And you're going to want to give them all money. You really have to fight that urge. And you have to make it a no-brainer in your eye that they can do this. They can exit. You really, really have to put a lens on. So it's not going to be unusual. The first 3 pitches, you're like, oh my God, they know exactly what they're doing. They're all going to make money. That's your inexperience.
This is going to the moon.
Going to the moon.
I love it.
I just wonder what color yacht I'm going to have. I mean, that's just the only question here. They're going to obviously make me a millionaire tomorrow.
Yeah.
And I just have to figure out what color yacht I want to do. Like seafoam.
What am I going to name it?
Seafoam. So you're going to fall in love with them. And that's how you know when you're new. Pump the brakes, ask around, do a little better diligence, talk to your network. So that's the quantity part of that. Does that make sense to you?
It does. That number is right for you based off of how many deals you want to do. If you want to do more deals than that, obviously the deal flow number has to go up. If you want to do less deals than that, you don't have to look at 1 a day or 10 a week, whatever it is. I mean, you can look at less. Just know that most really disciplined investors are looking at 10 to 20 deals for every one that they say yes to.
At any given time,
At any given time. Yeah, that could be over the course of a year, a week, a month, a quarter. I would say, so yeah, that number, that ratio, that makes sense to me. Whether it's the first thing or the second thing, I don't think it really matters. But the first 2 things you ought to do, and you mentioned one, is what's your budget? How much are you going to invest in private placement this year, this quarter? And what's your check size? Yeah. So I have a range of what my check sizes are, and I stay within that. Even if it's the best, coolest, sexiest thing I've ever seen.
Better man than I am.
Yeah,
Better man.
You gotta stay in there, right? So that's the first thing, or the second thing. But the other thing that's either 1 or 2 is what's the space that I want to invest into? Yeah. What's my investment thesis?
You're not wrong about that. That's exactly right.
And for me, I've got a really deep experience and expertise around healthcare and technology. That's where I spent a lot of my career before I got into venture and private equity stuff. And so my personal investments tend to be healthcare and technology related, or healthcare technology related. But that's a space I know really well. And I can see very quickly if the idea is solving a real problem in a unique way, if it's scalable, if there's going to be market exception for this thing. I can see that very quickly because that's my background.
I want to make a point on what you just said there, which is how many times do you get pitched about, hey, Josh, have I got a great idea for you in the semiconductor business?
Seriously, I mean, I just had a semiconductor one
was it really?
last week.
Oh my gosh.
Yeah.
But something like I would know
completely off the wall.
Nothing I would know about. And it sounds amazing. I would get PSA, maybe this whole episode is, public service announcement. If you don't know the space well,
it's an easy no.
It's an easy no, like, hey, I don't know this. Or if you do it, you better be following your best friend from high school who spent 30 years and I said, hey, this is a no-brainer. That's maybe the exception. Outside of that,
And even then, it's on the low end of your check
Yes,
size range.
yes.
You don't do the maximum on those types
you
of
stay.
deals.
I know you want to say more, but I want to emphasize that if you don't know it,
Yep.
it's an easy no.
Yep.
It's got to be an easy no for you.
So the space or the industry is probably the first part of how you define your investment thesis. The other side of your investment thesis is at what stage of the growth journey do you want to be in? Do you want to be that
Yes.
very first
Yes.
check in? Do you want to be in a seed round? Do you want to be in a Series A or a Series B? It's tough to be in those later stages as an angel.
Right.
It's possible. Does your check size fit those stages? You have to think about how early on do you want to be, because the earlier you go, the longer it's going to likely be before you see any returns, if any. The later you go, the less potential upside there. So you have to really balance where in that journey you want to be. Geography is important. Do you want to be able to go out and shake the hand and see the person in the eye
Yes.
when you're making a check, you're writing a check and making an investment? I do. May not be as important to other people. So geography is a thing for me. I got to be able within a day get to that person quickly and have breakfast with them, have lunch with them, have happy hour with them, and have a conversation if I need to.
Yeah.
That's important to me. So think about all of that in the context of what's my thesis. Know your budget, which is the total amount, and your check size. Those are steps 1 and 2
Yep.
in either order, but those are the first 2 things you do.
I want to put some emphasis on something you said, which is spot on. And for some investors out there, but folks newer to angel investing, or even founders know this too. But I'll make special emphasis to this. The earlier you are in a company, you absolutely have the greatest opportunity for amazing return.
Mm-hmm.
It is also the riskiest point for you to put
You
money.
could also lose it all.
You could also lose it all later. So here's the scenario. I start day 1. We just come out of the bar. I've on the back of the napkin, I told you about my idea.
Mm-hmm.
I don't know. What do you think it's worth? Like $10,000? Sure. Here's $5,000.
Mm-hmm. I own
I own half the company. I have lots of upside. But we just left the bar and we've not tested anything. We don't know what the hell this napkin's going to do or say or whatever.
But is it still a good idea when the whiskey wears off? I don't know.
Maybe. Likely. But my point is, it is riskiest then, and people need to understand that. So if you want to go early, from you talked about a thesis, we are on that early-ish stage.
Yeah.
We know we get our very best value there, along with knowing a lot of them are going to go to zero and have zero return.
Yep.
But the one $5,000 back of the napkin whiskey investment might net us $1.5 million covering the other $5,000 investments early on.
Right.
If you don't have the stomach for that, you wait later till it's more proven. They have accounts, contracts, offices. They're profitable. Name it. It's later stage, but they need a little bit of money to grow. Your valuation is not going to be 10,000.
Yep.
Your valuation is going to be $3.5 million, and your 5,000 is going to get you 0.0035% of the company. Now it's safer, but your return is going to be double, triple, quadruple. Not the 25, 50x that you're thinking about when you're really, really early. Sorry, that was probably longer than we need
it's
to.
good to.
That is, make sure you understand that early's not always bad. It ain't good, but it's not bad because you get your best return there.
Yeah, it could be great, could be awful.
Yeah.
Knowing that, though, is key in the context of your deal flow, because it helps you very quickly make decisions around, that is way too early for me. Easy no. I'm not even going to take a look at it any more than the 30-second review. That's way too late. I don't like investing, that little, that late. Easy no. So knowing your thesis is super important. Knowing your budget is super important for a lot of reasons. In the context of managing your deal flow, it is incredibly helpful in being able to say no. Okay, for steps 1 and 2, budget, deal flow, or thesis. What's a good deal flow look like? How do you actually get started? Like, what's the
how do you start?
Once you get those 2 things nailed down, like, how do you actually start getting in front of deals early on, and how does that grow over time in terms of how you build your deal flow?
Yeah, it's when you're just starting out. Let's say you're a shucks corporate guy or gal, and you're not in the startup community.
Yeah,
you don't know how to invest.
You're gonna take this year's bonus.
So what you do is you just have to do shucks for the millennials out there, or not millennials, Gen Z. For the Gen Zers out there, this is called social interaction. You actually have to network with people. Coffees, lunches, breakfast, happy hours.
IRL,
What does that mean?
in real life.
Oh my God. Yes. In real life, you have to actually meet people. And it looks something like this. look in your town. There's likely an angel network in your city or state.
Just fucking Google it. You'll find
Just Google, you'll find
dozen.
it. And then guess what you have to do? Show up there. Start talking to people. Introduce yourself. Say, hey, I'm Billy Bob, and I got a little small, bag of cash in the trunk of my car. I'm looking for investments. This is what I'm looking, do your thing. Here's my thesis. Here's my budget. Who do you know? And people will start to do it. The community of startups and funders, they get sort of the value of community because I'm an investor now. I might be a founder later. I'm a founder now, and I might be an investor later. And the 5 people investing in a different company, but I know a mutual person, we might be able to do business, contracts, open up doors, so that community is super tight. You start showing up to those angel networking pieces, you're going to start there. Number 2, look for other startup investors that just raised money. They'll be in the local paper. Hey, ABC Co. just raised $3 million. Call them. Hey, where did you get these other investors? So other investors are going to be tied in, period, to what you're doing. And eventually, for me, I've been doing this for a while. I don't need to do any more networking. In fact, like you probably experience, I have too much deal flow. I have everybody coming out of the woodwork wanting I don't have enough money for all the good deals I see. And that's a great place to be in. And it doesn't take long. So if you're looking at being an angel investor, I think you'd agree with this. It doesn't take a ton of time or effort, but you've got to be specific and targeted. Yeah. You've got to look for those angel people. I would reach out to your VCs, your local VCs in town, or any accelerators that you have in town. They too are all interested in having more investors invest in their companies to make them more stable, to help them grow faster, all the things. So in real life,
as a VC, one of the things I love being able to do is to say, hey, no, this is not a fit for our fund, our investment thesis as a fund. And I happen to know some angels or high net worth individuals that would love this type of deal.
Yes.
So being able to say no and pass that off is not just a VC thing. Other high net worth individuals, we say no to really good companies all the time.
All the time.
Because they just don't fit what we're interested in.
Yeah.
And being able to be that top of mind for that person to say, hey, this is not a fit for me, but you got to go talk to Mike. Yeah. This is great for what he likes to do.
Back to that community thing, I think that's exactly what I mean by that is how many times have we found a deal because somebody said no, but said, this might be for you guys. It happens all the time. A
lot of them. Yep.
And vice versa. It's kind of that, it's the best, easiest thing you can do because especially if you like the founder and you've kind of fallen in love with what they're doing, but it doesn't meet your thesis, your timing. Let's say it's a bad quarter. You don't have the liquidity. Yeah. Hey, I want to help you. Go talk to Jimmy. He's looking for that. And eventually you get really, really good at referring people the right deal, the right size, where they're at. And then people, again, if you're in real life, opening your mouth back to them saying, I'm looking for healthcare companies that are at this stage. I write a check size of $25,000 or whatever your number is. Let me know if you have any deals. Everybody, especially if they're invested. When I invest in a company, I think of everybody in my sphere. Who else would like this? Because I'm invested and I want to protect my investment by getting more people involved. That's what we do. So it's not that easy, but it is that easy. Yeah. You've got to just get out and start networking with people. And
I agree. There's a massive component to doing this successfully that centers around IRL, doing it in real life, talking to people and going to those events. There's the other side of it, though. There is a virtual component to this. There are platforms. There are some really great platforms out there. AngelList is likely the most common one that people have heard of. Yes. You do need to be a qualified investor to be on AngelList. So
what's a qualified investor again?
So you have to have, certain number of amount of assets. You have to have a certain amount of income to be a qualified investor.
It's still like $1 million in tours. Has it gone up some?
Yeah, no,
it's like $1 million in assets without your home.
Without your home,
and $200,000 or $300,000 of income. Yep. Then you're qualified. Which, if I could,
over the last 2 years,
if I could fucking rant for a minute, how dumb is that rule?
So stupid.
You're too poor to be investing to become rich. Yeah. I'm going to regulatorily rule you out of this or penalize the company trying to invest you. Are you fucking kidding me?
I know.
No, we have to have like crowdsourcing, this other bullshit. They need to be letting everybody invest. I don't know. Educate them.
Well, and
educate them on how this shit works.
They set those levels and that whole regulation behind this veil of we're trying to protect people. And if you
Thanks.
have this much money,
Thanks for the
you must
protection.
be a smart enough investor.
Yeah.
Which is ridiculous because
Yes.
I have met some of the dumbest motherfuckers I know are loaded.
Yeah.
So
Idiots.
Absolute idiots.
I get it, but I don't want to go all the way in the ditch, but fuck them. Everybody. In fact, we almost make it mandatory for Social Security. You have to invest some part of your check into, well, the government. I don't know if that's an investment, but you're going to get it back later. Maybe this analogy doesn't work.
Are you though?
Maybe this analogy doesn't work. But the idea
I'm
is
not banking on Social Security for
we
me,
should
man.
be teaching and incentivizing everybody,
Agreed.
and we should be incentivizing founders seeking out their return to lift everybody up. I mean, the qualified people are going to find their deals. These people, those people, the people need a way up, and that could be one of them. Wouldn't it be cool if I had $1,000? We're talking about hundreds of thousands of dollars of investing.
Yeah.
What if I had $1,000 that could turn into 5 later, and a 5 could turn into 10?
So AngelList did roll off another platform that's
Hey.
called Republic. That's been a few years now. Republic is geared for retail investment. I believe the minimum is $25. So you don't have to be
Okay.
You don't
I
have
like that actually.
You don't have to be a qualified investor, right?
What do the fees look like there? Do you know? Do they just gouge them?
I've not
Nice.
looked at it. I
Being
know
cynical.
it's more difficult as a founder or as a company trying to raise because now you're doing it $25 at a time, right?
Oh my God.
So, but they aggregate it, and there's a lot of there's over 1 million users on there.
I'm gonna check out Republic. You say?
Republic is one of them. Some of the other ones, I believe you have to be qualified investors for SeedBlink, WeFunder. What's the other one I'm thinking of? Our Crowd is one of them. So check those out.
Those are great resources too.
And if you are a qualified investor, those are great places to start. If you're not, and you're going to be more of that retail investor, but you want to get into this space, Republic is a great way to look at it and start. Because if you go to these angel networks locally, and wherever you're at, you're likely going to need to be a qualified investor to write checks into these companies.
That's true.
Very, very likely. And if you are, great. That's a great way to do it. If you're not at that level, then those Republic.
There's still a way you can do it.
There's other ways to do it. Yeah,
Yeah.
absolutely.
And you should, even though you're not qualified. But again,
Yeah,
dumb regulation.
it is very
Dumb.
stupid. Mike, we've talked a lot about digital thought leadership, building your own brand in this digital world. How does that play for you, and how should the listeners think about this for themselves? What role does your personal brand online and that online presence play in deal flow? How should it? How has it manifested for you? We can talk about how it's manifested for me too, but how should people be thinking about building their digital thought leadership in the context of driving their own deal flow?
Yeah. It's probably a bad question for me or red meat to me to be asking me that question. I see what you're doing. I believe,
I'm baiting you.
we believe, I think, I believe attention equals money and influence. I've been saying it now for a while. I'm going to keep saying it. And if you want to have influence or more money, yes, without it, there's nothing. I'm going to make sure I say it declaratively. There's nothing more useful, important, urgent that you could do than build your online brand, period. Part of that brand should look like, I am an angel investor. I'm looking for deals like this. And this is why I'd be a cool guy to have on your cap table, because I'm not going to, be in your business all day, or maybe I will, or I'll be helpful. And I would say that plays a really big role. It's the most significant one. The in real life stuff we were teasing about, that's one coffee, one connection.
Mm-hmm.
Happy hour, maybe a couple connections. When you're online, your digital thought leadership, your online brand, you're on 24/7.
Mm-hmm.
24/7, 365. That sort of passive approach to the market is amazing for you. You'll get people who are up on early on Sunday morning at 5 a.m. and they're looking at stuff like they come across like, hey, maybe he would like to invest. Sounds like he's really into shooting guns and riding horses. This will be perfect for my saddle company, as an example. So
Are you investing in a saddle company?
not yet.
Okay.
But so to answer your question, digital thought leadership, online branding, man, I think it's the snake oil of the 21st century. It's good for everything. It's not going to harm you. In fact, it'll help your deal flow. And you get to do all the things we talked about. You can broadcast to people, here's my thesis, here's my budget, here's my check size. Come and get me, kappas. So I think that's, and for me, it's worked too well, right? I get approached often, like you do, often, because they know, oh, you guys are investors, VC or entrepreneurs turned VCs. They know that's what we're about. And I like that. I don't.
It's not a bad thing. It's just you have to go into it knowing.
You have to work at it now.
Yeah, you're gonna have to go into it knowing that is a real thing that's going to drive traffic. You have to be ready for it. Yeah. Which again, going back to what's your budget, what's your thesis, it helps you say no quickly. It's interesting though when you talk about the in real life, the coffee. I've never really thought about this, but I would say probably half of my in real life interactions are a result of someone reaching out online. Saying, hey, I saw this.
Yes.
It looks like, what I'm doing might be a fit. Can we talk? And, we'll do a Zoom call. If we're local, we'll go grab coffee. Oh, hey, I'm in your town in a couple weeks. Let's grab lunch while I'm there. That type of stuff happens more often than I can probably
Now that you
remember.
say that, I'm trying to think back on my meetings.
There's a lot.
A lot of them are born online.
Yep. Exactly.
Either a DM on LinkedIn or an email or something, right? Or a mutual introduction to somebody who like, hey, do you know this guy, Mike, Nathan, or Josh? So maybe I'm even underselling it. So maybe it's even more powerful than we think. That online brand will definitely get you.
I don't think you have to spend a ton of time on that though, right?
No.
Like we're not talking about, hey, you got to start a fucking podcast. You got to do, you don't have to do.
Well, we do this,
once a week, once a month.
We do it once a month. I do some other stuff and you do some other stuff. Yeah. That's like a couple hours a week out of 40 hours. And the return on is that you get more and better deal flow around everything.
And I would say you don't even have to do it. I mean, you could do it a fraction of the amount of time that we're spending on it and still get enough results for what you're interested in, depending on how big you want to be in this space. Yeah. So how do you keep track of how do you, not necessarily the investments after they get returns or not? I mean, there's that's pretty easy to keep track of wins and losses there, but how do you keep track on the front end of deal flow? Is my deal flow good? Do I need to tweak my messaging? Do I need to say no differently? How do you know your deal flow is good? How do you keep track of that and say, yep, I'm getting the right stuff in front of me consistently enough that I can make informed decisions and I'm making good investments?
One of the things is, number one, it's the number of ones, and it's also the number of the right one. Mm-hmm. So what we talked about earlier, when it's the right sector, healthcare, tech, or media. Mm-hmm. It's early, but somewhat proven. But it's not complete. It's not completely pre-revenue. It could be, I suppose. But it's not back of the napkin.
But maybe that's your thesis is pre-revenue, right?
So how do I know that? When I'm seeing the right stuff at the right number, and I have to go, oh shit, I don't have enough money for all the investments I want to make this month, quarter, whatever it is. Mm-hmm. That's when I know I'm in a good spot.
That's how you know your deal flow is good.
Yeah. Well, when I run out of money.
Yeah.
Like, okay, well, I'm meeting I'm meeting my ceiling. I don't want to overextend. I want to extend. So then, and sometimes I will overspend because sometimes the second quarter of looking at deals is way better than the third quarter. Everybody fucks around during the summer. Try to get somebody in July and August.
It's impossible.
Third quarter always sucks. So
does the fourth quarter, right? Like no one works in the month of December.
You better knock it out before Thanksgiving.
Exactly.
You better knock it out before Thanksgiving because everybody's gone. Nobody wants to come back.
That's important though. I mean, if you've got really great deals that you feel really passionate about, and you gotta overcommit, pull money forward from a future quarter, and you have the discipline then to stay within that adjusted budget next quarter. I mean, that's fine too, right? You got to know what you can afford. Yeah. And stay disciplined to that over the long term.
Related to what we're talking about is I remember thinking about when Vail Scientific came along. Yeah. This is even before you knew about it. It's like, holy cow, this thing's going to be this is a unicorn, bro. Mm-hmm. Calling myself bro. That's what I call myself. Say, hey, this is going to be a unicorn.
This is your internal monologue?
Yes, this is my internal monologue. And I'm like, I'm not going to get, when I start to say the internal words of, I'm not going to see another deal like this in a while. Or ever. Yeah. Like, this one's going to be amazing. This one should be $1 billion company. Push in. That's a fun sort of conversation to have. We've had similar. I mean,
Yeah.
when you saw it, you had a very similar reaction.
Completely.
When we're like,
I
holy-
still love it to that degree.
Of course we do.
And they're raising around, and it's been really difficult to say no. we've got everything we can in this company.
Yeah, we have.
And we
to
have
be good
other
stewards.
we have money that we could put in, and we can't. We've hit the limit of what we want to put in one individual company.
Yeah.
It's like, but is that the right answer? Because this is it's going to the moon.
And I know everybody listening to this knows what we're talking about here, but I'll say it out loud for clarity. If you have $100,000 to spend, don't spend all $100,000 on one investment. Even if you think it's the next unicorn, because we both know we're wrong as much as we're right.
Yes.
And you could piss it all away in one. As much as you feel about it, as much confidence as you have, the discipline is spend $50K. Don't spend the whole 100 or whatever your dollar amount is. You can't be over-indexed in any one investment. If this is not, you have to treat your investment like a VC does.
Yeah.
I'm going to make 25 investments.
Yeah.
5 are going to pay off, or 3 are going to make the fund come back. 2 are probably going to get your money back. And that's how you're going to make, and 15 of them are going to die. Yep. You upset that formula that works, that clearly works, when you say, I'm going to only spend it on 10 companies and half of my money is going to one of the 10.
Yep.
You're not going to have a great return unless you're lucky and that one hits. So most people get
People
that.
do get lucky, but not consistently over time.
It's not a plan.
It's not a plan.
What is it you say your investment plan is? I like luck. I'm like the Irish. That's what I do. Send my kids to Notre Dame, wear a shamrock, drink green beer on St. Patrick's Day, celebrate St. Patrick's Day in a drunken way. That's sort of now we're going to get all the Irish trolls. You're defaming our heritage. With be lucky
I
charms.
can do that, though, because I'm Irish.
Are you?
Mm-hmm. Sure.
My wife is really Irish, and my kids now are claiming being super Irish.
Good for them. So
Good for they got to claim their
I
Viking
love that.
Germanic
I love
roots.
that for them.
I love that for you.
Got closing comments. Me, another close friend, just got $500,000. Well, for whatever. They got an exit. They got a new bonus. Whatever. They just
Hell of a bonus.
come into some, multiple hundreds of thousands of dollars. I want to start angel investing. What are the 3 things I should walk away from hearing this conversation to do next?
500,000. Let's use that as the foil.
Sure.
500. Chunk out either 100 or 200,000 this year, and then next plan out over not just 1 year, several years of investing. If that's the number,
It's a budget. Nail your budget.
Yeah, nail your thesis. Nail your budget. Roll it out. Yeah, start talking to people. I mean, if he's talking to you, that's a great place to start.
Mm-hmm.
Hey, Josh, where can I find more deal flow? Can you help me? Can you share with me your pipeline?
Mm-hmm.
Right? We have a hell of a pipeline.
Yep.
Yeah. Do the things.
I would agree with that. That's it for this round of Burn Rate and Bullshit.
Where the only thing we sugarcoat is our coffee.
You liked what you heard? Great. If you didn't, even better. We're not here to make friends.
Hit like and subscribe, share with someone who needs a reality check. And remember, hype dies and execution wins. Stop pitching, start proving.
Next time on Burn Rate and Bullshit, we flip to the founder side. How to actually find investors without groveling everywhere online. We'll take warm intros, smart cold outreach, and what you need ready before you ask for $1. If your fundraising plan is spray and pray, you're not raising a round, you're just broadcasting desperation.
Send lawyers, guns, and money. This shit has hit the fan.